Texas Instruments reports a solid quarter, and now the earnings focus turns to Apple, reporting after the closing bell. But futures are struggling to regain any momentum following European markets lower after private bondholders and Greece are unable to reach a haircut deal. And in Washington, President Obama prepares for the State of the Union. I'm Alix, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer at t3live.com.
And I'm Alix with theStreet, and together we bring you the morning call. We had stocks pretty choppy on Monday, S&P ending flat here. What's the next leg here? Are you going to start shorting? Are we going to break this uptrend to the downside? What do you think?
At this point, there are two uptrends intact. There's a longer-term uptrend that's been in place since October, and then there's an accelerated uptrend that's been in place since, I would say, late December. You know, I think that most traders that had a long-only approach like me, like we've talked about in like the past few weeks that have tried to hold multiple positions, 8 to 15, started to pare those down or go from like a tier 2 to a tier 1. I know for me, last week going into Thursday, Friday, I was holding 8 to 15 positions. I went to 3 to 6. And I'm becoming a little bit more stock specific versus just macro, long, long until we get some kind of definitive corrective type action, or we prove that we can continue to hold higher.
All right, so it seems like traders are getting a little cautious, putting on some hedges, getting ready to prepare themselves for a possible downside correction. But having Stephanie Link, Director of Research for theStreet here yesterday, it seemed like they have a lot of money in cash. She wants to put it to work. So you have to wonder, if we break this uptrend to the downside, how low do we really go?
Well, the charts will tell us what levels to look at. So let's take a quick look. So here are the two uptrends that I'm talking about. One started on that reversal day. Remember, we pounded the pavement, the October low. Then here's your November low. Here's your December low. Okay, so if you look at this uptrend, it just really stays smooth and it continues. Okay, but then more recently, when things got a little friskier, there you go in December, this accelerated uptrend started to take place, which you see the angle has increased. So that means it started to go up quicker. So we are still riding this uptrend, but if this uptrend or accelerated uptrend were to break and just say we get a close below maybe 130.50 or 130 on the spiders, you could see some corrective type action perhaps to 128.67, or maybe even, if you take a look, to retest this longer term uptrend. So, this dip right here, if it takes place, could be viable. The way we watch it is to see if this accelerated uptrend stays intact or gets breached. So we'll watch those levels as we're trading them.
And it's interesting, Scott, I was reading some economic research reports yesterday, and one of the highlights was President Obama's State of the Union address tonight. Not necessarily the FOMC meeting, not necessarily fourth quarter first estimate GDP on Friday, not necessarily earnings. So I wonder if at all we're going to see sort of the spotlight shined on the U.S. this week in maybe not so great of a way.
Well, we shall see. I think people are still like reeling from what happened with the debt ceiling debate. People are still upset that in
so
Washington.
This will sort of bring back into focus, the split Congress, a Democratic White House, and that sort of conflict.
Right, and what could they actually get done? What will get done? Can they limit some spending? Can they actually come together? People are talking about how they haven't had actually a budget the way they're supposed to have a budget for over a year. So there's a lot of problems still in the U.S., and people want to see what the direction of the country is going to be moving forward, and maybe they want to see what the president has to say to measure up whether or not a Newt or a Romney could come in and either take the White House or not. So, I think the noise, it's very noisy, but rightly so, because just as concerned as you and I are, we want the direction of this country to be on the straight and narrow, not, we don't want to follow the footsteps of a socialistic type of Europe. At least I don't.
Yeah, don't speak for me. But anyway, okay, so let's get to one sector that might have some upside opportunity, especially around earnings. We wanted to shine the light on the casino stocks. Scott, I pulled some really great data overall for the sector I wanted to share with you. Wells Fargo said that Las Vegas Convention and Visitors Authority reported almost 3% visitation growth in October-November. That cites, better employment, people feeling better about the economy. These names in this market have 33% market growth in Macau, which is where you definitely want to be. And mass gaming and cash room revenues in Vegas are 20% below their peak, which means we have a lot of upside potential. As a group, how are they performing, the gamers?
Lately, they've been a little different. If you recall, like a year ago, it used to be that Wynn was the best acting stock out of the casinos, and then it was LVS, and then MGM was really the dog of the three. And then recently, I would say in the last 3 months, LVS has been hanging around the best. Hasn't really broken out yet. MGM had the best percentage gains, and Wynn, took a tumble, but it was also a decent bottom trade. So I think there's different type of opportunities for all three, but overall I think there's a lot of opportunity based on those numbers and based on the technicals.
And in the reports that I also read, many analysts were predicting a rotation out of Wynn into Las Vegas Sands, and you mentioned that was already sort of happening. I wonder how much juice there is left. Las Vegas Sands quarter, though, could be pretty noisy. We have less VIP growth in Singapore and Macau, which is kind of well known, and every company is going to have that issue. I wonder if that's already baked into the stock. What was present for me, though, reading these reports, is that Las Vegas Sands is the one that has the most catalysts, and any catalyst, actually, in 2012. Possible dividend. They have projects underway to improve their VIP biz in Macau, and also they're in their first phase of a new Macau property, which is the only one that's going to come online in the next 2 to 3 years. What's the stock saying?
The stock is saying that it's waiting for some of these catalysts to actually happen. It had a great move in the last 3 years. Since then, it's been in this channel. It's been in this range. That's kind of driven crazy, traders a little batty. We call it the stock we love to hate because there's a lot of opportunity, but it hasn't yet done what we want it to do. So if you look here at the chart, short term, you just had a nice move. Short term, stock just went from 40. It just cleared this little descending trend line, had a nice strong day yesterday. This is actually a stock to look at today with the futures down to potentially go positive. But if you look at the weekly chart, the stock hasn't done anything. Look at this tight pattern back since 2010. So if it could finally get going and ignite, even if you look at the monthly chart, you will see that it had a huge move from those 2008 lows, but it's been holding up here very well as if they're waiting for these catalysts to take place and for earnings growth to accelerate, so then you can get a potential move to 80. So I do think you want to be a macro holder of LVS. You could buy it in this range, put your stop at 40, and if you're correct, you'll probably see at least maybe a $70 to $80 number at some point if it gets above this 60 and holds.
Now, obviously, there's a tight correlation between the gamers and sort of
50. I'm sorry.
That's all right. And any sort of leisure company, in addition to employment and a consumer slowdown. So I think it's important to also keep an eye on U.S. unemployment, which could be a positive catalyst, but perhaps a slowdown in China and consumers there, which would be a negative. So I think that might affect this whole group also.
I agree.
Okay. Wynn. So Wynn got hit, of course, on that lawsuit. Its biggest shareholder is suing Wynn here. Is it totally reflected in the stock, you think, at this point?
What's interesting is Wynn, no one really knew why it was just getting so beat up. And people like, Wynn used to be the best. Why is Wynn going lower? It's going lower. I guess some people knew. But when it was finally announced, you saw a big move lower, huge volume spike. So to me, that was when I said, okay, now Wynn is viable. So if you look at the chart pattern here, you will see here is a descending channel, okay, descending in nature in correction mode. You have a high, a lower high, continuing all the way down. I have to put the volume in here because this day that the volume came out and that announcement came out was unbelievable. So right here was the day that news came out, and it not only went green, it reversed pretty well. And then on my radar, it turned into a buy right around this 112. You had to move up to about 120. I think if this thing stays above 115, goes sideways, you could be a buyer for momentum above 120. And at some point this year, you could see 135, 140 if this group stays in vogue.
And then let's go to MGM because you mentioned that. Now, I also read in a note that Wells Fargo says it's showing about 7% fourth quarter 2011 year-on-year growth rate. We have strip gaming revenues have grown more than 11% in October and November. Baccarat revenues at more than 55%. Slot revenues at 4%. So if this is really a play on Vegas, the play on the U.S. consumer, is it a good one?
Well, it's interesting. I went to speak at a conference for traders in Vegas, and I stayed at their new hotel in the city center. And I remember trading MGM, and I'm like, I wonder what the city center is really like. And I went there; it's gorgeous. And I think the stock was trading around 10.5. I'm like, let me take a look here. Vegas seemed packed. Everyone there was a little optimistic, versus a year before where it was like prehistoric cold. And if you look here at the chart, it's had a nice move. I think we spoke about it twice. If it were to clear this downtrend here around 1050. So this was really your tradable buy. And since then, it's had a methodical move all the way up to 13. It even took out this recent pivot to show some strength. So obviously, it's hard to just chase MGM.
Right.
But you could see it move back down to the 12 area to buy it. And if it doesn't pull in and you get a decent earnings report, this thing could see 15, 16. I think if you're going to hold it to trade it, only certain days does it give you more bang for the buck. But I think you're right. This is the play on the domestic recovery in the economy. 60%
of EBITDA was derived from Las Vegas market in Q4. So keep that in mind. And they also just issued 850 million shares in long-dated unsecured debt, so no long-term or short-term funding issues.
That's great.
All right. And we're going to have a lot more on some stocks you want to trade today, as well as gold and gold miners, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
I wanted to really delve into gold versus gold miners. We've seen gold have a nice run, bounced above its 200-day moving average, but the miners have really not participated. And I wanted to get your take, Scott, chart-wise, which one's going to play catch-up? Will the gold price now come down to meet the miners, or will the miners play catch-up to the gold price?
I think at this point you're at that crazy inflection point, because with gold you saw this oversold bounce. It's starting to get a little bit higher than some of the bears would like in gold. And I'm not saying I'm a gold bear. I trade gold, and sometimes it's easier to predict than others. But if you look at the chart of GLD, you will see it's at this price point. You know, here is that high that was put in late August. Then you had a lower high in October. And then now all of a sudden, after getting so oversold, we set the cover down here. You had just your nice oversold move, but we're coming right into this downtrend. So this is an important spot. You know, right now I think the GLD is down about $1, but the longer it stays above 163, I think the more confidence some gold bulls will have for it to finally break this downtrend. And if gold could get above and sustain a move above this downtrend, perhaps then the miners that have been lagging could play a little catch up.
So very quickly, let's go to the GDX, because some people might say, well, you need a calmer stock market in general for the miners to want to participate. And other analysts are going to say all you need is a really good Q4 earnings report.
Well, I guess we'll see, because it should be coming out soon. I think that the GDX is saying that this move up in gold is just an oversold bounce. It's like they don't trust it yet, and who to know more than the actual miners themselves, so to speak.
So let's go to the charts. Want to see what kind of levels we're looking at.
Okay, so here you go. You look at this bounce in the GDX. Not very potent, not very compelling. It's already started. It's a bit of a correction move down. It's below all the moving averages. It's not even near this downtrend where you look at GLD real quick. It's above these moving averages, and it's knocking on the door of this downtrend. So right now, the GDX is definitely lagging the move in gold, and it has done that a lot. Only periodically during the course of a year do I see a streaky move in the miners.
What makes me really worried too is if you look at, say, a Newmont that reported it got hammered. The stock broke below its 200-day when all it did was said that 2011 gold production was in line. Cash costs were slightly higher. 2012 gold production guidance was just slightly lower than 2011, and the stock got hammered. You look at Kinross, guidance was completely in line, but production costs were going to be up almost 20%. So it's like those little, I guess production costs aren't little, but those tiny details are what's really killing the stock. It makes me think that investors just want them to go lower.
Yeah, or gold miners are so hard to trust. They always come out with like spot secondaries, or something blows up there, and every time you feel confident, they just get beat up.
You have to know the story. You have to really know the story and feel good about it.
Right, and have a long term.
Yeah. So Kinross and Newmont, any sort of trades here, or you just want to stay away?
Let's look at Newmont right now. Newmont, if you look at the chart, has been battered and bruised and very, very ugly. We called there was a decent buy way back when, but ever since it broke, just say this uptrend that was involved since August, it's been just heading lower, and you have a high, a lower high, another lower high, below all these moving averages. So at this point, I guess if you had to be long versus 58, okay, but I do think that if it breaks 58, this is much more of a short than a long.
And very quickly, Kinross, anything there here? KGC.
Oh wow, look at this one. This too also, battered and bruised. It put the high in back in September, and since then hasn't been able to get out of its own way. It must have had a gap here. Do you remember what that gap was? Was this some kind of earnings?
Yeah, that was the production guidance.
There you go. So, gap down wasn't priced in, and I guess you could watch it, because sometimes stocks like to fill their gap. So for a trade, if perhaps it comes up to this, downtrend and shows some relative strength and gold breaks out, maybe you can get a quick gap fill for a trade, but as an investment, I wouldn't trust this one.
And then I just want to check in with my favorite growth gold story, which is Randgold. It's using triple-digit growth there. Just some positive news out today. A big contribution from its Goncato mine, which is going to help offset weakness in another mine that's still ramping up here. Want to see what the chart's looking at, if it's holding up any better. Because growth-wise, compared to, say, Newmont and Kinross, it definitely is better.
All right, so let's take a look. Here you go. Let's see what's going on here. It's above the moving averages. That's something different than we just saw in Newmont. Nice, tight little range here. That also looks good for a trader. So I would say at this particular point, this is showing some relative strength. If you want to invest, again, you have to believe in the long-term story. If you want to trade it, this thing starts getting above 112.81, you could see a move to the upside, but I'm not sure if it's going to be able to diverge from the rest of the group if the miners as a whole, aren't moving with the trend.
And be careful with earnings report. It got a pass in the last quarter earnings when it missed, so it might not get a pass again. So just be careful with this stock. And then really quickly, I want to go to Royal Gold versus Franco-Nevada. They're both royalty companies, but Royal Gold just issued about $4 million in shares, or $4 million in shares. Franco-Nevada didn't. Is there one shaping up?
Well, let's take a look at RGLD first. This I looked at it before, has a tight pattern. So if the miners do want to rally somewhat, look at this pattern. You see some kind of pivot point to trade against. It's been corrective ever since it couldn't break out. It couldn't break out above this 82. So what does it do? It breaks down. Now you have this lower level pivot. I wouldn't say it's showing leadership here, but at least you have a levels to trade against. If it starts to get above 69, perhaps you get a move back to 72, but this group's going to have to show some strength. It looks more like if it breaks below 66, you're going to see a downside move.
And Franco-Nevada, it's FNV is the ticker.
FNV. This actually had a clean breakout. Shows you that something can. I guess, they didn't issue the share, so it got rewarded, but you have your high, a lower high. It broke this downtrend. So this actually went up with the moving gold yesterday. So I'd say as long as it holds above maybe this 40.70, it could build a little bit of commitment to the move, and then you could see it move back to 47, 48. This looks like one of the best in breed as of now.
All right, let's go to some quick ways to make some cash. Want to go to Shield. You were shorting it yesterday, mentioned it on Twitter. Have you covered your short position?
I covered 2/3 because what I do.
Shield, I mean Sears. Yes, I'm getting into trader talk. I'm talking to tickers.
I'm proud of you. That's good. Well, this stock had like a huge short squeeze. People wrote it off for dead. They said it was going into bankruptcy, which it still can. And then all of a sudden it had a huge squeeze out of nowhere because no one could get a locate. People have been trapped in this thing for like 4 or 5 days. To me, yesterday, it felt a little bit like it was ready to break down. I love this pattern that I call the red dog reversal, which people in my community are near and dear because what it is, it's a topping pattern. What happened is Shield opened down, traded through Friday's high of 51.17, squeezed everybody trying to be short. So the play was once it recrossed below that high, that's your short price with a stop at the high of the day. And then you could see a nice move down to 41 to 42. So I did cover 2/3. I'm going to try and cover the rest into this lower support area.
All right, very quickly, Apple earnings after the bell. Remind everybody of your strategy.
Well, let's visit that around 3:30. Apple had a very impressive move yesterday. Futures are down. It's down $1 or $2 this morning. I'm going to look for a cute cash flow trade to see if we can go positive, gain some strength. But then right around 3:30, I'll see where it is. I might just trade this one after the earnings report and trade it after hours versus taking options into it because you have a long month ahead, so there's a lot of time value there. So you could be right and wrong playing the options because there's too much premium. So for me, I think I'm fast enough to trade it after hours, but if you're an investor in Apple and you have a long-term time horizon, just stay the course. I do think that it has higher prices this year.
All right, U.S. Steel up more than 2% Monday. Are you going to add?
I'm in it, and I like to add above, I would say 28.60 to 29, lower level pivot, not a leader, but a decent pattern from this lower area. I think it breaks above that 29 with heavy volume, and you could see it move to 31.32.
Netflix reporting Wednesday.
Shorted it Friday.
Okay.
I covered. I didn't get involved yesterday. I had another move lower. Let's see where it is on Wednesday. It's it definitely lost some momentum yesterday. I would have thought it would have held above 96, 97 if it was going to stay strong. Went to like 94 just really quickly on the chart. I'm not. Today I might trade it a little bit. Here's your support right down here around this 88. I'll probably trade this one after earnings also, considering that the easy move from 75 to 102 is out of the way, and now it really has to prove itself.
And last up, Potash has earnings on Thursday. Had a nice run. You taking some profits here headed into earnings?
I did take some profits. I still have a little left, I think. I'm not sure. I have to check my swing account, but I probably will not be holding this into earnings. If you look at the chart, it's trying to act well. Typically even on earnings, when it gets, when it goes down, sometimes it reverses, but you still see a nice methodical uptrend. For a trade, though, if it goes above this 46, I'd probably be a buyer just for an intraday cash flow trade.
And a quick in 30 seconds, you can't forget about earnings that have already come out and those trades after the fact. So very quickly, what are some of those names that you're looking at now that have already reported?
Lulu. Lulu looks good. Lulu held the gap. I think I got to show you this chart because it's beautiful. You don't see a lot of these like this. Here you go. There's your earnings gap. Held up. Nice day yesterday. Above 63. I think this makes new highs. Crocs.
Crocs, okay.
Crocs also looks good. Earnings move. People said it was because of a takeover. I think it was because of the earnings. You see a nice little flag pattern here. I'd say above this 1880, and you could see a move above 20.
All right, so that's it for us for today. It was a long show, but thanks for sticking with us. Happy trading, everybody. I'm Alix Steele from theStreet.